Welcome to this introduction to the CRSP stock market database. My name is Alexander Hillert. I'm a professor of finance and data science at the Leibniz Institute for Financial Research SAFE and Goethe University Frankfurt. In this video, I would like to give you key information on the CRSP stock market database that is helpful for you if you want to start a research project on the US stock market, or let's say you are a student and you would like to do an empirical project or write an empirical seminar, bachelor or master thesis. The video is structured in 4 sections. First, I would like to give you a broad overview on the CRSP stock market database. Then we will look at key variables, including security identifiers, security characteristics, and then essential data points like stock returns, stock prices, volume, and information on the shares outstanding. In the third section, we will cover how do you actually select the variables you need, select the sample period you need, and how do you download the data. And in the end, I will conclude. So let's jump right into our first chapter. CRSP stands for Center for Research in Security Prices. This database is associated with the Booth School of Business at the University of Chicago. So it's an academic database and it provides really high quality data for the US stock market. For some more commercial databases, let's say you have Thomson Reuters DataStream, which is now part of Refinitiv Workspace. There are some data issues. Also, the coverage does not go back as far as for this academic CRSP database. So for empirical academic research, this database is really one of the ideal databases. It has also really high quality data in the sense that you keep historical information how it is, and you don't backfill any information with today's information. Also, there is a lot of additional information. For example, if a stock delists, you will get information on what is the final delisting distribution that goes to shareholders. The CRSP database is actually broader than just the stock market database. For example, there's also a database about mutual funds, US-based mutual funds. But our focus for this video will just be the stock market database. As I already said before, we have a very long sample period that we can get from this database going back to 1926. So you can cover like the Great Recession in the 1920s, 1930s, like the World Economic Crisis, the Second World War, but of course also the more recent period like the COVID pandemic or Great Financial Crisis. The database is annually updated, typically in mid-February. So currently, when we record this video here in September 2024, we could get data until 2023. Regarding the data access, you have different options. You can use a web browser or you can use an API, for example, using Python. In the later part, when we do data selection and downloading, we will use the web interface, which is, I think, more convenient for people who do not have a solid programming background. CRSP is typically part of the Wharton Research Data Service platform where different databases are provided, but it would also be possible to get CRSP as a standalone product. If you're at Goethe University Frankfurt or at the Leibniz Institute SAFE, what is important for you is that CRSP is available in our House of Finance data room. The CRSP stock market database has also different sub-databases to relate to the data frequency. So you have a daily stock file that gives you, like the name says, daily stock return, and you have a monthly stock file which gives you always the information based on the last trading day of a month. Returns, of course, will be monthly returns from the previous month last trading day up to the current month last trading day. And then you have a bunch of other databases, for example, this stock market indices database is just aggregated market information, like what is the equal weighted or value weighted return of all stocks. And what you will typically need for your research project is either the daily stock file or the monthly stock file, depending on what you are looking at. Now let's talk about the key variables that are contained in this database, starting with security identifiers. The idea is that you want to be able to track a stock from the beginning when the stock has its initial public offering until the very end, until the stock delists. We could do that, of course, by using a company name, but company names can change over time. So for example, Google was formerly called Google and is now called Alphabet. So if we would use the company name, it would be a bit difficult to track the stock. So what options do we have if we want to identify securities? And CRSP gives us two options. One is on the security, that is stock level, that's the perm no. And one is on the company level, that's the perm co. Company level means that one firm, one company has exactly one perm co at one point in time. But it can have multiple perm no's. Why is that? Well, I have an example for you. You all probably know Alphabet, parent company of Google. And you see that at each point in time, January 2023, February 23, March 23, we get two entries with the same perm co. Makes sense? One company, it's all Google. But the perm no's are different. You see that for each month we have two perm no's, one starting with 14, the other starting with 90. What is the reason? Well, the reason is that Google has two types of common shares outstanding. One is Class C shares and the other is Class A shares. In this specific case, the voting power at the annual shareholder meeting will be the difference. Class A shares come with voting power while Class C shares do not. No matter which of the two identifiers you are using, be it the perm-no or perm-co, both are permanent identifiers. That is, they almost never change, only except if you have really major corporate events. And this is what I'm going to talk about here. So if you have a minor event, like in September, October 2015, when Google renamed from Google Inc. to Alphabet Inc., you see that both the perm-no and the perm-co do not change. And that's also what we want if a company changes its label. For example, if Apple Inc. was formerly called Apple Computer Inc., but it's still the same firm, so we want to have an identifier that is not affected by these changes, and CRSP gives us these identifiers with perm-no and perm-co, so that's great. However, if you have really major events like a bankruptcy restructuring, then identifiers can change. And I have an example here for you, again from a company that you probably all know, that's GM, General Motors. During the financial crisis, General Motors got in trouble, recording large losses, and then it filed for bankruptcy. Since there was a bankruptcy restructuring process, and after a bit more than 1 year, GM had a new initial public offering, issued new shares, and was again listed at the New York Stock Exchange. And the key feature is that these were new shares. So the old shares were liquidated, shareholders received some sort of liquidation payment, there was the debt restructuring, the new shares were issued, and therefore the old shares are not really related to the new shares. And this is what you also see here. You see that there is a change in the perm-no, in the security identifier, but also in the company identifier. You could argue that, of course, it's still the same company producing cars, but there was really a major restructuring. I think technically speaking, the company was split, or I should say legally speaking, the company was split into two identities, taking different assets. So I think you can argue that it makes sense that we have a change in the company identifier. Now you may ask, okay, you have some other data sets that you would like to combine with CRSP, and they don't have the perm no and the perm go, because these are just CRSP identifiers. What can you do? And the nice thing is that CRSP gives us further set of identifiers. You have the ticker symbol. I included it in the tables before. You see the ticker symbol. So for the class C shares of Google, it's GOOG. And for the class A shares, it's GOOGL. Ticker symbol is maybe not ideal because at different point in time, the same ticker symbol can refer to different companies. Also, there can be confusion, like you can have the same ticker symbol at different stock exchanges. And a better identifier, better in the sense more unique, is the QSIP. And CRSP gives you two QSIP variables, and you need to carefully think about which variable is the one you need. You have the variable that is called QSIP, which is today's QSIP. So when you download the data today, meaning the CRSP data ends in 2023, then this variable will report the 2023 QSIP going back until 1926, given the company existed in 1926. So it's not historical data. If you want to get historical data, use the variable nQSIP. To illustrate this difference, again, we can look at the name change of Google from September 2015 until October 2015. Let's start with the historical QSIP. So we see that we have two QSIPs for the two share classes, which makes sense. Let me give you a bit of information about the QSIP. It's an 8-digit number. Sometimes you have a 9th digit, which is just a control number. And the first 6 digits indicate the issuer, so the company. And this should be identical, and you see here it is. Only the last 2 digits differ, which indicate what type of security is it. And we see that the historical QSIP changes after the name change. So this identifier is not as permanent as the perm no or the perm co. Again, also for the new QSIP, after the name change, we see that the first 6 digits are identical and only the 7th and 8th digit are different. If we look at the QSIP, which is again today's QSIP, you see that the QSIP is written back until the beginning when Google becomes available. And this can be problematic because then in the QSIP column here, you have information that was not really valid at this point in time in September 2015 and earlier. Why are still both options valuable for you? That's because it depends on what other data you would like to merge the CRSP data with. There are some data providers that always report current information. And in this case, you would like to use today's QSIP. So if the other database also backfills today's QSIP, then perfect. Then you can take the QSIP, combine the two data sets. But if it's historical data, that is, let's say each year the information in this other database is recorded and then no longer touched, then you will need nQSIP. So it's important to keep that in mind and to figure out, okay, before merging the data sets, what is the correct way of combining the two? Should it be on historical identifiers or on today's identifier? And last point, we already discussed that the QSIP can also change for minor firm events that not really, one could argue, affect the business activities of the firm. So that's all that I wanted to say about security identifiers. And now we can move on to security characteristics. And here the idea is, how do you select the important securities that you want to keep in your sample, and how you can get basic firm or security information. One key variable is the share code. And this is important because the share code tells you what type of security you are looking at. And even though the database is called CRSP Stock Market Database, it not only contains stocks. First of all, it contains not only US stocks, but also foreign stocks that are listed in the United States. Then we have some other non-stock securities in there. For example, there are closed-end funds or there are real estate investment trusts. And therefore, when you want to do a study only on stocks, which is often done in empirical research, it's important to filter out all the other securities that are not relevant for you. So the share code, it's abbreviated as HRCD, allows you to select the relevant securities. And the standard universe that is used in empirical research papers are ordinary US stocks, and those are defined as share codes 10 and 11. Just to provide you with an example, we go back to Google and you see that both have share code 11, so they are ordinary shares. To give you an example of a foreign stock that is listed in the US, we can look at Deutsche Bank. It's a German company listed here in Frankfurt, being headquartered in Frankfurt, Germany, and it's also cross-listed at the New York Stock Exchange. And you see we have here share code 12, which indicates that it's a foreign stock. And by applying the standard filter, we would exclude all foreign stocks to have a homogeneous sample of only US domestic firms. So this is the first variable that you may need. And then there is another variable regarding the exchange where the stock is listed. And this is the exchange code. Again, there is a convention in empirical research of which exchanges are included in a sample, in a study, and which are not. And the main idea is that we include the three large US stock exchanges, the New York Stock Exchange, which has the exchange code 1, the American Stock Exchange, AMEX, with the exchange code 2, and the NASDAQ with the exchange code 3. One important note here is that even though CRSP starts in 1926, only the stocks at the New York Stock Exchange are available in 1926. For the American Stock Exchange, the data becomes available in July of 1962, and for the NASDAQ, the data becomes available in 1973. There are few observations in 1972, but really full coverage starts only in 1973. Again, I have some examples for you from the most recent period, end of December 2023. GM is listed at the New York Stock Exchange under the ticker symbol GM. Then we have Adams Resources and Energy Inc. being listed at the American Stock Exchange under the ticker symbol AE. And then there is Alphabet listed at the NASDAQ under the ticker symbol GOOGL. You may wonder, what other exchanges are there? I haven't not really heard about other major exchanges. Well, there's a bunch of other exchanges like Boston Stock Exchange or the Toronto Stock Exchange, exchange code 19, even though it's Toronto is of course not a US city, but a Canadian city, but still it's included in the CRSP database. And there's also information about stocks that are traded on the over-the-counter market, exchange code 20. And again, to get a somewhat homogeneous sample, it's the standard convention to say, okay, we only care about stocks that are listed at the NYSE, AMEX, and NASDAQ. One thing that I would like to warn you about is that it can happen that the same ticker symbol is used at different exchanges at the same time. This happens quite rarely, but it can happen. To give you an example, in October 1964, the ticker symbol RMC was used at the New York Stock Exchange for Reliance Manufacturing Corp. and for Ramco Enterprises Inc. at the Amex Stock Exchange. And then simply using the ticker as a unique identifier would not work, because it would not be clear which of the two companies the ticker RMC refers to. The data becomes only unique if you use a combination of exchange code and ticker, and of course at a given point in time. Now I would like to provide you with a final set of, these are more like firm characteristics instead of security characteristics, which is the company name and the industry classification. Regarding the company name, it's historical information. Why I'm emphasizing that? Because there are other databases, for example, the CompuStat database, which provides accounting data, like information from the balance sheet or the cash flow statement. And CompuStat only reports the most recent company name, so basically today's company name. But CRSP provides you with historical information. So using CRSP, you could look at, let's say, name changes. What happens if you rename your company from an old name to a, let's say, somewhat green name? Is there any investor reaction to that? And that would not be feasible with CompuStat, for example. One disadvantage of the CRSP company names is that they can include abbreviations. For example, MGMT in the company name stands for management, or SVC stands for services. You've also seen that in the previous example where we have MFG, if I remember correctly, which is manufacturing. So it's a bit cumbersome to work with these company names, but it's the only way where you can get historical company names going back almost 100 years. Then for your analysis, you might be interested in knowing which industry is a company working in. For example, you want to do some industry analysis or control for industry time trends or something like that. And here CRSP provides you with the standard industry classification codes, or in short, SIC codes. And it's again historical information, which CompuStat does not have. And the SIC codes are 4-digit numbers. The lowest one is 0100, so 100. And the largest one is, of course, 9999. The SIC codes follow a logic that the first two digits, and that's why I included the 0 before this 100 here, to make clear it's a 4-digit number. The first two digits indicate the sector. And the first digit is really the very broad sector. So for example, the first digit of 6 indicates that the company is a bank or an insurance company or real estate company or somewhat else related to finance. The second digit would be a bit more granular, differentiating between banks, insurance companies, let's say national banks, local banks, and real estate companies. And then if you dig deeper, like third and fourth digit, you get very granular information on what the company is actually operating in what field. And these SIC codes are not often used directly, but they are more often used by translating SIC codes to pharma-French industries. The pharma-French industries are very popular in academia, and they have developed different industry classification sets. One very broad industry definition that only in total comprises 5 industries, and a much more granular classification set which comprises 49 industries. And the idea is always that for each of these groups, be it 5, be it 12, be it 49 pharma-French industries, that each group comes with a set of SIC codes of the industries that belong to this pharma-French group. And if you want to use these pharma-French industries, or if you see a paper that uses that and you would like to know, okay, how can I do that? Well, what you would do is you go to CanFrench data library, you find the link here, then you go down to industry portfolios, and then you click on your preferred one, be it the 5 industries, 12 industries, 36 or 49 industries, there is really a large variety you can choose from. You click on details and then you get a detailed file of how SIG codes translate to a Pharma French 5 industry. That's all for the security, or in this case firm characteristics, and we can now move on to our variables of interest. So what we are typically interested in is price, return information, information on how much a stock is traded. And you can get all this information from CRSP. Let's start with the price data. CRSP reports, most importantly, the closing prices, so the price at 4 p.m. when the New York Stock Exchange closes or Nasdaq closes, as well as the opening price and the highest and lowest price during the day. That is, the high or low price. Why did I write quotes here? It can be that a stock is not traded on a given day. And in this case, instead of reporting the high price, CRSP will report the ask price. Similarly, if a stock is not traded, instead of the low price, CRSP would report the bid. When there's no trading, you don't have a closing price, so what do you do instead? Well, you take the average of the bid and ask. So if the ask is, let's say, $100.50, the bid is $99.50, the average would be exactly $100. However, to make clear that the stock was not traded on that day and that this number of 100 is not an actual closing price, but just a bid-ask average, CRSP will put a minus sign before the bid-ask average. That does not mean that the price was minus $100. It just means the bid-ask average was 100. There was no trading. That's why we don't have a closing price. And you see that even in the recent period where we typically have the feeling, okay, a stock should be traded on each and every day, there are some stocks that are not traded on some days. For the monthly database, the requirement is that there's trading at the last day of the month. So here it would not really help if there was trading on March 30th or March 29th. If there is no trading on the last day of the month, CRSP will go and collect the bid and the ask price on the last trading day of the month, compute the average, and then put in the average here, 4.57, and put the minus sign in front of the average to show you, okay, this is not an actual closing price. What you can also see here is that for April, the last trading day was April 28th. So it does not always need to be the last calendar day of the month. What you will get is the last trading day of the month. Regarding return data, CRSP has a return variable that is already adjusted for distributions and stock splits. So if, let's say, you get a $2 dividend from a company, then we have to take into account that you got this $2 and the stock price might have fallen compared to yesterday, but at the same time you have $2 in cash that we need to take into account. And this is done when you use automatically by CRSP, when you use this RET, the holding period return variable. The same is for stock splits. And here I would like to show you an example. So Nvidia had a stock split in 2021, and it was a 1-to-4 stock split, meaning that one old share was split into 4 new shares. The stock split took place in July of 21, and you see here that in June the stock closed at 800, and at the end of July the stock closed only at 195. Now you may say, okay, that looks like a terrible return, like a loss of about 75%. However, if you look at the number of shares outstanding, you see that before there were 623 million shares outstanding, and after that it's 2.5 billion shares, so 2,500 million shares. And then you have a other variable where you see it more directly. That's this CFA CPR variable. That's a cumulative factor to adjust prices. And you see that we have a 4 here for the period before the split and a 1 for the period after the split. Now looking at this return column here, you see that CRSP did not record a return of minus 75%, which one could naively think these prices suggest, but instead it recorded a return of minus 2.52%. So let's double check this number. How would you do that? So let's assume you own one NVIDIA share at the end of June worth $800. At the end of July, you got 4 NVIDIA shares because there was this 4-to-1 split. So we have to take 4 times the $195, subtract what we had the month before, the one share being valued at 800, and to get a relative return, we divide by the old share price at 800. And if you put these numbers in the calculator, you will get a return of 2.52%, return of a negative 2.25%, and this is exactly the numbers that you have here. So just to provide you with a bit more information about these two variables that I used here, shares outstanding is simple, or Shroud is the number of shares outstanding recorded in thousands. That's why I said before the split we had 623 million shares outstanding, and after the split we have the 2,500 million or 2.5 billion shares outstanding. And this CFR CPR is the cumulative factor to adjust prices. If for some reason you would like to use returns without dividends, for example, you might want to do a comparison of how important is it to reinvest dividends or something along these lines, then you have also the variable RETX, X for excluding dividends. The variable will still be adjusted for stock splits. In addition to the return variables and the return without dividends, there's a third variable related to returns. And this is the delisting return. What is the idea of the delisting return? The previous two return variables that we talked about, they are only available as long as a stock is listed at an exchange. However, if a firm, for example, files for bankruptcy, or if a firm is taken over by a different company, the stock will be delisted. However, even after a stock is delisted, shareholders may receive a final distribution. For example, if a company is taken over by a different company, the shareholders might be compensated by a cash payment from the acquiring company. And this cash payment can be different from the last stock price that has been recorded. And the idea is that this delisting return captures the difference between the last closing price and the final payment or the final value. Or if you think about a bankruptcy, then the firm is liquidated, its assets are sold, and it could be that at the end shareholders receive a small liquidation payment, which is typically lower than the last closing price. And then this further loss relative to the last closing price should also be recorded and should be taken into account when you conduct an empirical analysis. Let's come back to our General Motors example, and as we talked about earlier, the company filed for bankruptcy in 2009. And you see that the last full month for which we have information in the sense of non-missing price and return data is May 2009. Here we have a return of minus 60%, which makes sense because GM is already in trouble. You see that share price has dropped to 75 cents. And then during June, the stock is delisted. Therefore, we have no closing price at the end of June and no return. However, in the end, shareholders received a liquidation payment which was lower than the 75 cents, and it was more precisely 18% lower. So we have a further loss of 18% relative to the last closing price. CRSP not only provides you with the delisting return, but also with further information for why a company was delisted. And this is in the variable delisting code. Here we have a value of 574, and you have to look at the CRSP manual to see what's behind this category here. And the CRSP manual will tell you that 574 means delisted by current exchange, bankruptcy, declared insolvent, which makes perfectly sense in the GM case. And here the idea of the delisting code is that it's a 3-digit number, and the first digit here tells you the broad category. For example, 2 would be related to mergers and acquisitions, and 5 would be more related to delistings by the exchange. Just to highlight the importance of the delisting information, think about an empirical asset pricing analysis where you develop a trading strategy. Then it's important that you track firms, stocks you invested in, really until the point that they are no longer available. And this point can be after the stock is delisted from the exchange. Let's say, for example, you invest in GM, you're surprised by the delisting, you are still stuck with the stock and need to liquidate it, and the proceeds that you will get from this liquidation is reflected in the delisting return. So it's important to incorporate both return and delisting return information to get the full return effect of investing into a stock. And how do you do that? If you have both information available, like in this example here of Countrywide Financial, you see that in June 2008, we have a negative return of 19%, and we have a positive delisting return of 2%. And here you see a delisting code of 231, which means when merged, shareholders primarily receive common stock or ADRs. ADRs are American Depository Receipts, which is roughly similar to stocks. I don't want to go in details here. And in this specific example, Countrywide Financial was taken over by Bank of America. And when you were a shareholder of Countrywide Financials, you got in exchange shares of Bank of America, and you got a bit more in value compared to the $4.25. More precisely, you got 2% more value in shares of Bank of America when you gave your Countrywide Financial shares to the acquirer, to Bank of America. And in this example, we see that for June, we have both a return available and a delisting return. So what would we do? We would compound returns, meaning we have 1 plus this return times 1 plus the delisting return, multiply the two and subtract 1. In the previous example, we had a case where we did not have return information, but just delisting return information. In this case, it's easy. Just take the delisting return as the return. Even though CRSP is a very good database, delisting information is not always available, particularly in the earlier decades, like the 1920s, 30s, and so on. There are cases where stocks disappeared and we don't have really a clue on what the final delisting payment was. And that holds even in the 70s and 80s. And there are 2 research papers that analyze of what you should do in these cases. The papers are a paper by Shumway about how do you correct delisting, how do you correct for missing delisting returns when you have stocks that are trading on NYSE and Amex. And then 2 years later, a paper by Shumway and Water, where they look at NASDAQ. And I encourage you to take a closer look at these papers, but the main idea is that if you have specific delisting codes in the 500s and you have missing delisting returns, then you should replace by the missing delisting return by a negative return of 30% for NYSE and Amex stock, and I think it was around 45%, minus 45% for NASDAQ stocks. But like I said, if you're going in this direction, please take a look at these 2 papers to make sure that you comprehensively account for delisting returns. The last set of variables that you might need is information on how often or how much a stock is traded, and here volume is a variable of interest for you. It's the number of shares traded during a day for the daily CRSP files, or in a month for the monthly CRSP files. There's one difference in recording. If you work with daily files, volume is recorded in units of 1 share. So if you get a volume of 10, it means 10 shares are traded. In the monthly file, it captures the sum of the daily trading volumes during that month, and it's recorded in 100 shares. So if you have in the monthly file a number of 10 for volume, it means that 1000 shares have been traded. One important piece of information for you: even though the return data for Nasdaq stocks starts in 1973, the volume data does only become available 10 years later in 1983. This is important to have in mind if you, for example, include trading volume as a control variable. It means that you lose all Nasdaq stock observations from 73 until 82 because of missing values. And the last variable that is often used when relating to the number of shares is the number of shares outstanding. It's abbreviated SHROUD, and it's a number of publicly held shares in units of 1000 shares. And this holds both for the daily CRSP file and for the monthly CRSP file. To compute market cap, what do? You multiply the numbers of shares outstanding by the share price. And remember here, price can be negative if there was no closing price, but it was a bid-ask average. Therefore, it's important that you take the absolute value of price. So you would have SHROUD multiplied by the absolute value of price, being the market cap in $1,000, because shares outstanding is recorded in thousands. To get it in millions, you further divide it by 1000. These variables are the ones that I use most often in my research projects. Of course, there are more variables. For example, you find detailed information about dividends, but to keep the presentation also at least somewhat short, we will stop here. In the next part, we will talk about data selection and download. You now know what's in the CRSP database, and now we will discuss how can you actually get the data from the CRSP server to your computer. What I'm going to show you here is the web interface that you can use. As explained in the beginning, CRSP is part of WRDS, which is the Wharton Research Data Service. That's basically a platform where you have a large number of different data sets. For example, you see that there's also CompuStats accounting database, or IBIS, which provides analyst forecasts. And if you want to get CRSP data, you obviously click on CRSP. Then you say, okay, you want to get to the stock security files. And then you can pick, do you need your data on the daily frequency or on the monthly frequency? In empirical asset pricing, we do the test often on a monthly frequency. And in this case, I recommend that you pick the monthly files because they are much smaller and therefore easier to handle. Remember, for the daily files, in a typical month, you have 21 trading days, meaning that you have 21 times more observations compared to the monthly file. However, if you do some sort of event study, would like to analyze in a short window, like one day before, one day after an event, what is happening on the stock market, you will obviously need the daily stock file. When you've picked your desired database, you can follow a 5-step procedure, and the first step is simply to select the sample period. That will depend on your research projects. The earliest possible start date is December 1925. Why I'm saying that CRSP only starts in 1926 because we have just one observation at the end of December 1925, which is like not really usable. 1926 is the first year when we have full data. What is also convenient about CRSP is that at the end of your data selection process, you have the option to save your query form. And then when you log on to CRSP again, you will have an overview of saved queries. So for example, if you forget a variable but have saved your query, you simply go back to CRSP, open your saved query, add the variables that you forgot in the first iteration, and resubmit your query, and you can easily incorporate additional variables. Regarding the sample period here, if you know that for your project you will need data from, let's say, 1980 to 2010, then I would simply pick this period to keep the data small. Think about that sometimes you need like lagged information or future information, so it does not do much harm if you include like 1 or 2 additional years before the beginning and after the end of the period you are mostly interested in. Then in the second step, you can decide like which securities to include. And there you have different options. You can specify specific company IDs. That I think would make only sense if you do more a case study. Let's say you want to focus on the return reaction to when Apple introduces a new iPhone and you're only interested in Apple stock. And then what you could do is you could click on here where you enter the name or the ticker symbol. So you could say, okay, Apple has a ticker symbol AAPL. You enter AAPL here, say, okay, the identification you provided is a ticker, and then you're good to go. Alternatively, if you have a few companies like IBM, Microsoft, and Apple, you can put the ticker symbols or whatever other identifier you would like to use in a TXT file and upload the TXT file. Or, that's the option that I prefer, you can simply download the entire database and do the filtering process by yourself. And to do that, you simply click here, search the entire database, and then you can be sure you get all securities that are part of CRSP. And then later on, you can still decide, okay, you can say, okay, keep only observations if the ticker symbol is either IBM, MSFT, or AAPL. Next, you select the variables of interest. Here you can either scroll down and click on the relevant variables. They will be added to the right side where currently you see there are no variables selected. As soon as you click on one of them, they will appear here. If you are not quite sure what's again the nqsub compared to the qsub, what you can do is you can click on this question mark button, and then a new window will open giving you the definition of this variable. And if this list has 62 entries, if you say, okay, that's too long to search for your variable, then you can alternatively click in this select search all field and start typing the variable name like price, and then the database will make a suggestion like what could be the variable that you are looking for. The variable perm, the security identifier, will always be included. The perm co is not always included, but I recommend that you always incorporate or include the perm co to make sure that you have the firm level identifier if needed. And typically what I also would recommend, particularly if you go for downloading the entire database, basic information like what is the share code. Remember, here we have the convention to typically focus on ordinary US stocks, meaning share codes 10 and 11. This variable will be helpful to implement this filter, or include the exchange code to make sure that you only get stocks from New York Stock Exchange, Amex, and or NASDAQ, but not stocks that are traded over the counter. Below the variables to select, there is a so-called conditional statement builder. Let's say you are worried, you're downloading daily data and you're worried that your data set might get too large, then you also have the option to directly restrict your data set by imposing some filters. So as soon as you select a variable, let's say we pick exchange code here, you would be able to include the selected variable in your conditional statement builder. Then we could say, for example, we specify that the exchange code must be either 1 or 2, meaning that we only include stocks if they are listed at the New York Stock Exchange or at the American Stock Exchange. And I don't have an example here, but it's very intuitive. Like you pick the variable, specify what is your condition, equals, larger, smaller, and you can also combine the different statements with an or condition or an and condition. So it's very intuitive. Again, it's only needed if you are worried that the data set might get too large. There is no need to do it on the server. Alternatively, you can always open the full CRSP data set, and then in the software that you are using, be it Stata, be it Python, be it R, be it SAS, you can impose the if condition, keep if exchange code equal to 1 or 2 also in your analysis code. Then the fourth step is simply specifying the output format. So I'm a Stata guy, so I will pick the DTA file. I know that many of you are using R or Python. Then for you, probably a comma delimited text would be optimal. For the SAS guys among you, you can pick SAS here. To speed up the download, I would always go for a zipped file. And if you have a preference for a specific date format, feel free to pick your preferred format here. Then, like I said, it can be helpful to save your query in case you want to come back to your data request and add a few variables. So you can check this box here and then enter your query name like CRSP test download 1. Maybe you pick a more meaningful title, and finally you submit a form. And the last step is simply to wait for your data to be ready. Typically a new browser window will open or a new browser tab, and then it can take from a few seconds up to several minutes for CRSP to prepare your data and for you to be able to download your data. The general rule is the larger the data set you want to obtain, the more time it will take. And of course, also the larger the database, the more time it takes CRSP to filter out like what are the relevant observations for you, particularly if you have specified some conditional statements. And then you simply click on this button here, save the file. Personally, I would always double check whether the download went correctly. So I would open the file, take a look at how many observations do I have, and then you could compare it with the number here just to double check that your file has been properly downloaded and there's not some sort of data loss. With that, I think we are good to go, or you should be good to go to implement your first CRSP-based project. So let me briefly conclude here. The CRSP stock market data is really a high quality database. As you have seen, you can get a lot of information, not only while a stock is listed, but also if a stock disappears, you get information on what was the performance of the stock after the delisting. For that reason, and because of its long historical coverage, CRSP has become the standard for empirical stock market research. It's easy and convenient to use. As you have seen in the previous part, downloading data from CRSP is quite intuitive. It's just this 5-step process. Still, there are a few things to keep in mind. Be aware of the pitfalls. So if you have a negative price, it does not mean that the stock price is really negative. It just indicates there was no trading volume on that day. Therefore, a closing price could not have been determined. Instead, CRSP will give you the bid-ask average, and to inform you about that, CRSP will put a negative sign in front of the number. But like I said, the stock price is not negative. Which is also helpful, and what you probably will need is the CRSP data manual. For example, if you want to focus on specific delisting codes, or you need some additional exchange and you now know, okay, NYSE is 1, Amex is 2, and Nasdaq is 3, but what is the exchange code of the Philadelphia Stock Exchange or the Boston Stock Exchange? You want to look that up in the data manual. Or if you want to do an analysis of ADRs, then you need to know the share code of ADRs. So it's always good to look at the CRSP manual. Then I would like to talk also briefly about different alternative databases. And if you need US stock market data, please do not use the following two databases. One would be Refinitiv Workspace or Thomson Reuters DataStream, which has been part of Refinitiv Workspace. And you should not use this database because of data quality issues. There's a very nice and heavily cited paper by Inns and Porter where they compare the data in DataStream to the CRSP data, and they find a ton of issues in the DataStream data. So you would need to do a lot of correction procedures before you can work with this data. And therefore, please don't do it. That will make life much easier for you if you start with CRSP right away. And you could also say, then I would like to go to Bloomberg. Of course, Bloomberg is a good database, but Bloomberg comes with download restrictions. So the volume of data points the number of data points that you can obtain in a month is limited. And with CRSP, we have really a great alternative for the US stock market. So there is no need to use the scarce resource of Bloomberg download volume when you can go instead to CRSP and do like unlimited downloads. With that, let me quickly show you the references. I talked about these papers briefly. If you want to take a closer look, for example, about how do you account in detail for the delisting bias in CRSP, the Shumway and Shumway Water paper are great sources. If you want to know more about how to relate SIG codes to Pharma French Industries, this 1997 paper is obviously a great source. And if you, for some reason, decide to work with DataStream, maybe you are using non-US, you're looking at non-US stock markets, then please take a look at the Inns Porter paper. With that, I thank you very much for watching. I hope you've enjoyed this video and found it helpful and are ready and eager to start your own project. We are very much happy to receive feedback from you, and if you have questions, don't hesitate to contact us anytime. Just write to datacenter@safe-frankfurt.de. Thanks again and keep exploring.